Welcome back. Well, let's focus on our What's Trending segment on Halftime report today. And we're tracking the QSR space with Westlife, Devyani International and Sapphire firmly in focus after earnings and a spate of brokerage notes. So brokerages remain constructive on Westlife, with both JP Morgan and Macquarie maintaining an overweight stance, citing a Q3 EBITDA beat. On Devyani International, sentiment is improving as a new CEO is taking the reins. To give us a 360-degree view on the QSR space, we have Mangalam joining in, and we'll follow that up with an analyst, Karan Tarani, who will break down what really changes for these stocks from here on. Mangalam, over to you first.
Well, three quick service restaurant stocks in particular are doing well today, and the cat among those pigeons was let out by the Devyani International results yesterday, and more importantly, the management commentary, where they said that there was positive same-store sales growth across most of their brands in January, barring Pizza Hut, and for that as well, the process of turnaround has begun. More than that, they've also achieved EBITDA break-even for one of their brands, Biryani by the Kilo, ahead of what they had guided. And then there was a management change too. We have the CFO of the company, Manish Dawar, who will now become the president and CEO of the company from April 1. So all these factors, along with the trigger, which is the merger with Sapphire, doing extremely well. And that explains why Devyani and Sapphire are doing a lot better in today's trading session. In fact, brokerages have written as well. We have Macquarie, which has an overweight rating, a target price of 160 rupees. They're saying that sustaining Jan's pickup is extremely crucial, and that's something we have to track. They announced the merger with Sapphire, and in the near term, there could be some amount of uncertainty. That's what Jefferies believes, but this is a long-term positive. They've upgraded the stock to a buy. And Bernstein weighs in on the new leadership change, where they're saying that this begins a long road to recovery for the franchise. Westlife, the operators of McDonald's, on the other hand, they too have seen positive same-store sales growth in the month of January. And there is a note coming in from Macquarie there too. EBITDA beat was on account of lower royalty payout, and at the same time, normalization of third-party aggregate delivery actually improved their performance in the fourth quarter, along with value offerings in dine-in that did well for them. So positive same-store sales in January needs to sustain for the QSR sector to actually do well from here on. The question again, is the tide turning, or is it just a false start that we've seen multiple times in the past? Stock-specific action, obviously the consolidation with Devyani and Sapphire, along with a new change of ownership at Restaurant Brands Asia, will be a key positive trigger to track.
Take that point. Thank you so much for explaining those moves, Mangalam.